Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq 100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Monday afternoon, we have Chris Dearborn, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq 100. And Chris, it feels as if some of the uncertainty has been removed from the market, not necessarily out of the woods, but a little less jittery than we have been. What are your thoughts overall? And of course, we also have to take a look at NVDA and how that has impacted semi stocks today.
The NVIDIA story is kind of what's moved the market a little bit. I mean, the index was up almost 1% this morning. We're now in the red right now, but the index is still holding very well. We've had a nice rally over the last couple of days, and we'll go into the chart in a second, but earnings have been strong, though for a weaker bar. And the commentary around it has been mostly similar type of items, concerns on supply chain issues, inflation issues, and other items there that's going to be a ongoing factor. The question really comes down to whether or not the index can recover from the lows. Remember, we sold off on fear, and now the market's starting to rally a little bit. The question is it a bear market rally and we're going to get hit again, or are we really going to recover at what is a new normal area, which is kind of more the mindset here, at least what we're seeing on our desk.
And Chris, let's take a look at your first chart here with fresh technical levels to watch on the Nasdaq 100.
Right. So last week we were talking about the index hitting the 100-day moving average of 12,866, and that's kind of where we came through and bounced off of. We hit the Fibonacci level. If you look on the lower right, I kind of highlighted that in the yellow there at 13,225. It makes sense that the index is going to consolidate right around this level. A little bit above, a little bit below is fine. We want to see this consolidation for the next 5 or 6 days before a move higher or lower. Support's still strong at the 12,866 level. New target on this, though, would be 13,900 if we have a nice bullish rally. Note on the bottom, the relative strength index. We did hit the overbought condition last week, coming in above 70. So that deemed a near-term pullback from the overbought condition. What we're seeing right now on RSI is 63, means we have consolidated from that overbought condition, giving buyers a little bit fresh ammo as prices have pulled back here.
And Chris, your last chart here, with the constituents adding to Nasdaq 100 performance.
So it's about a 50-50 split between winners and losers today, which is always a good sign for an index under consolidation. Obviously, the NVIDIA news and some of the news out of China is pulling down names like PDD and JD. And then, with NVIDIA, we have Marvel getting beat up a little bit. But on the flip side of it, Team is doing very well. Lucid, Tesla, with the news of the split getting approved, is also doing well, and Netflix. So it's really a split down the middle of who's doing a little bit better, who's doing a little worse. Point-wise, NVIDIA's lobbing off about 35 points, with Microsoft losing about 13, and Amazon. Facebook/Meta is up about 8 points. Tesla is adding to that, as well as Netflix and Atlassian.
All right, Chris, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.